Let's talk a bit about the FTSE 100, German DAX, and the Nasdaq 100. We had some very interesting moves there on the back of the US presidential election. Okay, so this is the FTSE 100, and the FTSE 100, when I left for holiday, we were in a downtrend, right? And I had been calling a lot of these declines, and we got a few of them correct, and we had some significant slides. But as usually happens, you know, when it's more clear what's going to happen with the US presidential election, the market tends to come back. If you look at statistics, there's no major benefit of having a Democrat or a Republican president. In general, the market is gained by the same amount. On the other hand, when you have a Democrat president with a Senate that he doesn't control, which looks to be the most likely scenario, stock markets tend to gain the most. Now, Biden himself, you know, he's looking to introduce more stimulus, really, and less trade wars as well. That's a big plus. You're seeing emerging market currencies and emerging market stock markets, and also all the major stock markets gaining. As well, of course, we have the news about the vaccine, and that's putting us back into some sort of normality. And you're seeing some stocks like Cineworld, the movie operator, which was up with 50% yesterday. Because suddenly people realize we're going to go back to the office, we're going to go back to the cinema, we're going to go back to the restaurants. Of course, it's going to take some time, but let's not be too pessimistic. As I said, when COVID-19 started, I said, look, we're humans, like nobody's going to beat us because we are, well, we're humans, right? Nobody's going to beat us. Some of us might die, of course, and somebody did unfortunately die. But overall, we will prevail as we did 100 years ago with the Spanish flu. We will always prevail. We'll always find a way, especially when we work together. And that's really what the vaccine is all about. Now, we had that massive move. Now, of course, I hope you didn't, take any rash decisions during the actual election. I did try to warn you when we did the updates before the election that a lot of people are going to try to get you pumped up, try to make you think that you have to trade. And of course, you can trade, but you can also just take positions after the fact. That's what I did. Just after, when it was more clear who was going to be the winner, I took some positions, but actually in what I thought was the best thing, which was emerging market currencies. Now, if you look at this right now, we went upwards and we went from being sort of very oversold to a bit overbought, but then we had that news about the vaccine and the market just pushed higher. Now, this is the challenge. This is the huge challenge here because you have a very, very strong gain. But I don't necessarily think people are buying things like the FTSE 100 directly. I think what they're buying is probably the shares that make up the FTSE 100, like the banks, for example, where maybe you have reversals there. And those people, they don't usually buy, they buy mostly on long-term prospects. They don't necessarily buy on technicals. And that means that they're happy to be able to withstand a bit of market volatility. Like they don't care if their shares are going to be down a bit over the next couple of months because they think, all right, 1 year from now, we're back at normality. And, if you look at something like Cineworld, which is sort of down massively or was down massively. Look, this was yesterday, I think. So from yesterday at one point, look, 132%. You see yesterday when I looked at this one was at 50% and closed at 39. So you see it's gaining massively because people looking at it and say, all right, here people thought, the company is going to go bust. Now suddenly, maybe we should be at 150, maybe we should be at 200. That's what they're looking at. And these people, again, they don't really care. They're just looking at the big picture. But if you do care, like I do, if you're trading this in the short term, this is not the time to buy. At least not from sort of a swing trader perspective. I would wait for this to pull down a bit. I would look for this to go down to maybe 6,038. And right now that feels really alien. When is that going to happen? Well, right now people are buying and we might just go up and up and up and up. We might do that. But we're approaching resistance. So I wouldn't get too excited. If you do want to trade, maybe you should trade like the other people do, like the long-term investors. Look for stocks that could potentially gain. And you look for technical setups there where it makes sense. But from here, from just trading the FTSE perspective, this is not the time to buy. I think we need a bit of a pullback and then upwards, and the trend will remain bullish above 58.37. If you look at something like the German DAX as well, you know, we had some really good success here. We said look to sell up here for this to tumble, and it did tumble far more than I thought it would do. And then when we're trading down here, of course, you know, we have a downtrend and we just want to keep on selling. But then we had the election and the market moved up and up and up. And again, something like an election, it's like the non-farm payrolls, or at least what it used to be, just a random thing that just creates a lot of, triggers a bunch of stop loss orders, really. And so I would not have traded on the back of that. And now again, this is the German DAX. We're up at highs here, and we're still going to head towards probably that double-dip recession in Europe because they are shutting down. And realistically, we're not going to have the vaccine out until January. So with that in mind, you know, you're going to have bad data realistically, but people still buying here because the market doesn't care what is happening right now. A lot of people, especially beginners, they don't understand that basic thing. The stock markets, they price in, you know, 10 years, 20 years of good and bad things, but realistically, it doesn't look exactly what we hear. You know, people buy today because they think that these companies in the German DAX are gonna be selling, you know, 50, 100% more products 1 year from now, 2 years from now, and that is why they're buying here. So what's the game plan here then? Well, I would be a buyer, but we need a bit of a pullback. We might potentially take out 13,319, and then this just continues to soar upwards. We could do that, but from a trader's perspective, looking for good residual ratios, we need a bit of a pullback. The alternative is we just trade sideways here for a little while, and then we have a nice little range, and then we go bullish on the breakout. Finally, let's take a look at the Nasdaq 100. It's suffering, but it could be bought. It could be bought right here. Why is it suffering? It's suffering because of all these stay-at-home stocks are now being sold. So people are buying your Cineworld and shifting money out of these winning stocks like Netflix, in the UK, Ocado, things like that, like in general, right? Just because now we're seeing a shift here where all these downbeating companies are probably going to do better as soon as we get that vaccine. And that's why we're going down a bit here. But I don't think it's going to drop massively. I mean, from its high, it's already down with some 6%. And we are within a big ascending triangle. Now, this is a very bullish pattern. It's a very bullish pattern. And it does suggest we can go up with some 14%. Now, there are different ways of trading that. You can buy like we said here, and I'm going to continue to be bullish about 11,216. But longer term investors, they're probably going to focus on something like 10,944. And for this to trigger, we need to go above here. But some people might look to buy down here at dips, and that's what I'm focusing on right now. Let's finish off with the Dow Jones. This is the Dow Jones. So this is, we had a very nice break, new all-time high. A lot of people are scratching their heads, they're pulling their hairs out. They're like, oh, but you know, I lost my job, or I had this, so I'm not making as much money. A lot of people out there, they just like to complain a lot, and they always look at the world from a negative perspective. Now, I know that we have a situation here where this is supported by a lot of stimulus. Now, if you've done your homework, you know that that's the way the market works. You need to learn the rules of the game and then play slightly better than everybody else. That's how you start to make money. A lot of people out there are just crying though, like, oh, like the stock market should be much lower, and my shorts would have made money if the market didn't manipulate if the central banks didn't manipulate the markets. But hey, the central banks have always been helping out the markets in times of need, because there is this greater thing there, which is the real economy, and that is what they're trying to save. And as a consequence, the central bankers are saving their friends on Wall Street, right? And we just need to understand that. And it's not that there were like no hints that this was going to go higher. I remember, I think it was the head of Goldman Sachs that said something about, you know, the market being a bit exaggerated when we're down here, given the prospects of a vaccine. Exactly. Remember that, a vaccine. There was talks about vaccines here in March already, and that is the truth. You know, a lot of people said it's going to take 2 years. Yeah, okay, 2 years, but it's going to come, you see. and something like the Dow Jones actually, you know, declined to levels not seen since 2016, in fact 2015. And it's a bit absurd to assume that the US economy and these companies have not improved their situation for 5 years here, because they have. And we are where we are right now. And again, one shouldn't be fighting it. But just remember that there's some people out there who are chronically pessimistic, and you don't want to pay attention to them. As long as the US economy grows, which it will continue to do, I think, as long as we have innovation, as long as we have that drive, humans just love to make money, right? Humans just love to improve. Humans love to invent new things. And that's what we are. And that is going to continue to support something like the Dow Jones, because these companies here are the best of the best, and they will keep on innovating. And the cool thing with something like this is that it's the 30 biggest companies. Now, if you have a company that doesn't do good, what happens? Well, company number 31 goes in here, and that bad company goes out. So this is effectively always the top 30 companies. And that means that it will always go upwards. But of course, some companies that don't do good, again, they get kicked out of the index. So I'm not surprised at all that we are trading where we are trading right now. And as from sort of a trend following perspective, we're bullish. It's definitely overbought. I wouldn't really be buying here. I was hoping for a bit of more of a decline. Let's give this another day or two. Hopefully it will come down to 28,694, and then maybe from here we can look to get involved. And remember, less trade wars, less problems, more money making, like companies that just want to have peace and quiet so they can do their thing. They don't like a lot of rule changing. And it's going to be very interesting to see here with President Trump gone, because it's going to be less market intervention. Like if you have been trading crude oil or other stuff like that, you know for a fact that, you know, there was a lot of intervention when prices were too high, for example. And then as well, a lot of intervention in the currency markets as well, which is not really what I would like to see personally as a trader, because it ruins trends. Okay, good. Let's see what happens. You know the ground now. Yeah, you know what's happening. We have dealing with bullish trends, and I think we can realistically continue to go higher. It's just about those risk-reward ratios, getting those right now. Again, everybody's super excited. It might be so for a few days or two, but then what usually happens is people sort of realize, oh look, my share is up with 136%. You know, like the people that bought Cineworld. And they say 136%, that's a lot of very good return. And they'll probably get out of that. And that suppresses prices a bit. All right, guys. Thank you so much for watching. Don't forget to check out our other updates. We did a currency market update. We also did will produce a commodity market update. Thanks so much, and see you guys soon. Bye.